Welcome everybody. Welcome once again to the weekly nerdcon1.com edition of the Crypto Mind. Yes, the Crypto Mind. I got my own YouTube channel, but I come to you once a week here on nerdcon1.com. A nice association of great creators that talk about lots of things nerdy. And I guess to some, crypto space, cryptocurrency, and maybe especially crypto mining covers definitely in the nerdy space, and that's why I'm here to share my content, my knowledge with everyone else, and become part of the rich group that is nerdcon1.com, providing you many different offerings. So make sure you always check them out, and then I just want to let you know that brand new nerdcon1.com now has a merch store. And we each one of us creators, we have our own particular merch section, but it's all there on the nerdcon1.com store. So check it out. Support us by buying nerdcon1.com merchandise, and also from mine, the Crypto Mind. I guarantee that if you put one of those shirts on and are walking around, people are gonna ask you, like, what is that? And what is this whole crypto thing? And it may start a great conversation. One last thing. Up front, I'm just going to say it, please. If you enjoy the content you're about to hear, please like this video. Please share it out to your other platforms like Facebook, Twitter, things like that, so that others can get the knowledge that's really important. And please subscribe to my channel. We need to get to 1,000 subscribers on this channel as fast as possible, so that I can bring you a lot of other offerings that I can't yet. So, and that way you also get notified when I have new material out. And many times it's going to be timely, like what we're dealing with right now. So, so here we are. Hello. Here we are, and if you look, many times when I've done this video, behind me, this price chart from coin360.com is looking all green or even dark green and amazing. Up, up, up go the prices. Well, as it happens in markets, it never does that 100% of the time, right? So this is a time of profit taking, of testing of Bitcoin, and you'll notice that almost across the board, most of the instruments out there, crypto ones, are down. So they're losing money right now. Now, so this brings up a really good question that and actually answer about crypto mining, which is crypto mining in a down market. How does that work? Does it work? What are the implications? How do we have to check this out? So I'm going to go with you about sort of the very interesting thing about crypto mining in down markets. So here we have Bitcoin, Ethereum coming down. I mean, Ethereum's still at a nice price, so is Bitcoin. I mean, what, a couple months ago we were talking and it was like at 17, 18, 19,000 each. So it's all relative. But yeah, it's down 9% for the last 24 hours. And a day or two before, it's also been suffering a little bit. So that puts a scare in some people, just in general. And if you're just a hard money investor who just plops their money in a market and trades, and that's how you take your risk, that's how you invest, yeah, it's scary. Is it different for miners? It is different. And I'm gonna tell you why. With us miners, all of our costs are front loaded. So to be able to mine, you have to buy equipment. You have to buy, if you want to build a rig, you have to buy the motherboard, the power supply, the processor, the RAM, and then the video cards, multiple that you're going to put on there to do your stuff. So you have to pay out for all that up front. So your risk is that you spend money before you even make a dime, right? Doing that. But once you've done that, the only thing that miner does is generate coin for you. And it generates coin for you when the prices are going up. It generates coin for you when the prices are staying the same, and it generates coin from you for you when the prices are going down. That's all it does. Is it's an accumulation machine. And so what's interesting is that in my thinking, in the way I perceive crypto mining, is that nearly all the costs associated is a front up cost. All I can do from now is win. So, so I started at negative whatever the cost for my rig was. And then every day that I acquire through mining, it's making that negative smaller until I break even, and then it starts pushing it into profit. The only other expense that I have besides the equipment expense is electricity. So I calculated with my the rig that I have that has 5 AMD RX 580s, 8 gigabyte cards, and a 1 AMD RX 5500 XT 8 gigabyte card. That 6-card rig puts out about 650 watts to the wall. And then I think I actually calculated at 800 watts just in case to give myself some room. And here in Albuquerque, New Mexico, the tier 1 rate for electricity residential is 7 cents a kilowatt. And so I'm spending about $1.02 a day with that rig on electricity. That's my one cost. If I make more than $1.02 ginning up coin on average each day, then I'm in profit. So, and that really overall is sometimes is not as big of an expense as you think. Now, it depends on what you decide to mine and what the markets are like, right? So, yeah, if prices go up, you're making even more. If prices go down, you're making less. But you're still making, and you're not really spending that much more to make. So how do you figure that all out? Well, over on a site called What to Mine, and there was 1 or 2 other sites too, but whattomine.com, you can they have many different ways of checking out, like figuring out expenses and whatnot. In this one, I just tagged on the GPUs tab and selected the AMD Radeon RX 580, and they've done some benchmarks, and they've put out their stats on this. And so right now, at this moment in time, and then I filled in the 7 cents per kilowatt hour. You'd put in whatever it is with yours. Whoops, it went back to 0.01. So I'm going to go in here and fix that. Let's see. All right. So, whoops, 205. 0.07. Okay. So it didn't change Ethereum, but it did. Oh, there we go. $2.14. So it's saying right now, on average, if you have one AMD Radeon RX 580 card, 8 gigabyte, running hashing Ethereum, that you should make in profit after the expense of the electricity $2.14 for one card. And I got 5 of them mining. And then I've got the RX 5500 XT, which actually mines slightly less than the 580. But looking at the 580s, we're looking at about $10 and change in profit every day after electric costs. And that's would be the normal thing. So if you're chugging away on one of these pools and chug, and they find blocks and you get your little slice and everything else after the end of 24 hours, if this holds up, I would be making $10.70 in a 24-hour period. Not too shabby, right? Not too shabby. And this is actually better than when the price of Ethereum was 200 each higher. When it's over at 1400, I wasn't making $2.14. It was just slightly under $2 a share. So you're saying, well, wait a minute, how does that happen? how do you make more Ethereum mining when the price is down? Well, it's all about something called the GUI. And this is the transactional fee, the GUI. Now, if you go to CoinGecko.com, where you normally go to look for all your pricing information, at the very top, some people don't notice, but there's this ETH gas price monitor, and it tells you what the GUI is at the particular time. I'm going to reload to make sure it's the same. It's gone down. So this is an important point. Actually, this is take 2 of me doing this video, because when I recorded this video, I forgot to plug in my microphone. Yes, the joys of being a creator. But now I can show something dynamic. So it was 91 GUI. I hit refresh, and now it's 56 GUI. So GUI is sort of like a Satoshi in Bitcoin. GUI is 1/100 millionth of an Ethereum, and this shows what the GUI rate is. Now, there's all kinds of other factors you put in, and how much gas is like it's how many units of GUI that you pay to do your transaction. And in the Ethereum world, they built in an auction system, so that if you notice here where it says fast, standard, and safe, that it's giving you an estimate that if you're willing to pay more GUI, your transaction will happen faster. It bumps it ahead in the line. And if you pay less GUI, you're saying, look, I may not have my transaction happen as quickly, but I'm willing to just pay less and wait later for the transaction to happen. So people determine what the price of the GUI is just by auction. If they want to pay more, and you can on some of the places where you trade and do things, you can add manually the price you want to pay. There are some trading YouTubers out there that actually blame miners, greedy miners, for high gas prices, and I have to laugh at that, because us miners don't determine anything. We just run our machines. They do the software, and whatever block we hit, and whatever the reward is, that's set by the program of Ethereum, and then the gas fees that people are willing to pay. That's what we get. We don't get to say yes or no to that. So if you ever hear that miners are forcing gas prices up, that's completely false. So here we are, and this is lower than it was a bit ago, and this price fluctuates. So when you mine and you win a block, you or the pool that you're in wins a block, you get the basic block reward, which, like for Ethereum, is just over 2, maybe 2.1 Ethereum, plus any of the transaction fees during the block time, and then that's all spread out between everybody who got the reward. So and that's how they figure out, like, hey, based on how things are going, even though it fluctuates, you're gonna make about, what was it, 214 per card each time. So here I am on FlexPool. I had moved over from digipool.org over to FlexPool to try them out. They have about 200 miners in this pool right now. 2 of them are real kind of big dogs, and the rest of us are smaller dogs. And there's a whole bunch of us sort of like in my range, where we got like a 6-card rig type hashing about the same amount. And so it shows you here, like, hey, the next time we hit a block, next block share, you should get about 0.0069 ETH based on your contribution right now. Right now we've hit some blocks, and your reward, you've racked up 0.002 ETH, which is about $2.94. And just to let you know, that's pending. Pools a lot of times have this minimum payout. So if you see here, min payout 0.05 ETH, when it reaches that level, so when I get payouts that stack up and hit 0.05 ETH, then they will pay me. So I would say that right now this action is sort of the normal, typical kind of mining. This pool finds blocks at least about 3 or 4 a day, and I get my share of the payouts based on that. And this will be racking up over time. between the payouts, and it's running at about the clip that What to Mine was talking about. But it says, I joined a day ago. It's been just a little over a day now. But I've already gotten a payout. And so this is what floored me this morning. At the time of this recording, this morning on Thursday, I looked at my unpaid balance and it says 0. And that only happens if you've just recently been paid, right? And I'm thinking, well, I haven't mined long enough, like on that average clip, to get to the 0.05. I think I had gotten like about 0.01 Ethereum. And so I'm like, I shouldn't have been paid. What happened? And I'm going to show you what happened right after this word from one of our sponsors.
Hey everyone, at Disney Adams here from the NerdCon 1 channel. I would like you to join me in welcoming GamerGoat to the family of sponsors for the NerdCon 1 channel. If you are a listener or a viewer of NerdCon 1, you can now get a 15% discount at www.gamergoat.com using code NerdCon1. That's www.gamergoat.com using code NerdCon1.
Okay, welcome back. Thanks for taking the time to listen to our sponsor. Okay. Without further ado, what happened, right? So I'm thinking in my head, oh, the pool got lucky, meaning that we found more than 3 or 4 shares in a day, which was our normal. Maybe we found 6, 8, 9, 10 shares. We just went on a streak, a lucky streak of hitting blocks. And that's why I got a payout, right? I probably got 0.05 and there you go. So I went to the payouts thing and it showed me that I got paid 0.06 ETH, and I'm like, that's $75, which is nice. And then I was like, wow, that's pretty amazing. And of course, I'm curious. I want to know, like, how did that roll out? So I went to go to the blocks tab to see what were all the blocks that we hit. And when I looked, I was just floored when I saw this right here, the bottom one that I'm highlighting, this block, 83.26 ETH was our reward. I'm like, you're kidding me, right? No kidding. This is all just, it's on the blockchain, and you can hit you can hit the transaction block over here and go to Etherscan and check it out, and sure enough, it's 83.26 ETH. It was the 2 ETH block reward, the plain old block reward that happens each time, plus 81.26 ETH in transaction fees. Holy Toledo! Like, I don't know if I've ever seen anything like that before. So that is just amazing. It was like this monster block. So somebody or some collection of people were trying to trade like crazy, were willing to pay exorbitant fees to make sure they were the first at the table to make a transaction, and here you go. And we're the benefactors because we happen to solve that block for this, the share for this block, and get the reward shared between all of us in the pool. Of course, it's proportional, right? So those big dogs are going to get more, little dogs get less, but my less is still way more than I would have expected, anyway. So I got like 6 days worth of mining all in like a day and a half. So I'm pretty stoked. And this is in a down market. So why is that happening? Well, when we go back to this whole Gwei thing, right? And let me click on it and reload and see what it's saying now as we come back. ETH Gwei 68. It's going back up. So why is that happening? So it's because I think when markets move, whether they're moving up or moving down, and move in a big way, like we're seeing here, close to 10% in a day, one way or the other, that means there's a lot of action going on, and a lot of people are either trying to buy or trying to sell, and that puts a lot of pressure on Ethereum and the gas fees to, people are willing to pay more to, get in or get out during those more volatile times. So as a result, whether they're getting in or getting out, and whether the price is skyrocketing or plummeting, the one thing that's constant is they're going to want to pay more gas fee to get it done, and we miners get the reward for that, for their desperation. They're so desperate to get out, or to pay more. And by the way, with other coins, you can do similar things. You can pay a higher transaction fee to speed up your transactions. It's just that Ethereum is like one of the most used blockchains there is, because it's not just Ethereum. There are hundreds of these tokens with their own ecosystems running off the backbone of Ethereum, like a hinge to it, using Ethereum smart contracts to complete their stuff. So yeah, it's a very congested highway right now, and so that's what's going on. Like, would you be willing to pay more for the toll road that doesn't have as much traffic on it, I guess, is the analogy here. So yeah, so it wasn't a whole bunch of blocks that we got lucky on. It was just one monster whale, big fish story. I swear to God, it was this big. It was huge. It was like reeling in that marlin, man. Yeah, woo, woo. I don't know if I'm ever gonna see that again, but that was just amazing. So, getting back to this now. So here we are in our down market. It looks depressing. For miners, if most of your income or most of your investment and spending is in mining, this is not as big of a problem. The only problem that appears in down markets is really like when there is sort of a overall long-term bear situation. Like we had after 2017 huge spikes, there was like a year and a half of just, kind of like slowly going down, spiking down and then kind of slowly down, attempts at an up, but no, down, extended long-term down cycles, which brought the profitability like that you would see on What to Mine of these coins, down, because their value is going down so much. So that could happen, and you could get to a place where a coin doesn't, live up to the electricity cost. But right now, we've been overall in a bull market. So even when you look at something like Bitcoin, or in the case like for us hobbyist miners like Ethereum, because that's something we can do with our GPUs, right? And if you go and you see this, and it just looks darn ugly on the 24-hour chart, right? But if you even look at the 7-day chart, it doesn't look quite as ugly. 2-week chart, oh, so that's all this is, and we're still like right here. And as you keep expanding the chart out, you realize how this is just a blip in a general long-term big upward swing. So, we're at a place right now where profitability is huge. And it's not just for Ethereum. There's a lot of other coins out there too. This is one of my biggest points about mining, is that mining in some ways is more a stable activity than just the straight pure buy and sell trading house action. I think that doing both probably is fine, and maybe the smarter way to go. But mining brings a stability to your overall making of money in the crypto space. So I'm acquiring. And so even when the market's going down, the value of my portfolio is being tempered by the fact that I'm still adding extra value in. Like, for example, my portfolio went down, but hey, there's $72 new that came in. So that's $72 better than what it would have been had I not had any mining rewards. To me, again, mining lowers the anxiety level on being in this space. It provides stability for you, and it gives you something to kind of count on. and that's why I am the crypto mind. That's why I'm a giant proponent of mining. I do own crypto that is not mineable, that I think are valid, good projects. But I'll tell you that overall, when you see out there a lot of the projects that are steady, that kind of weather the long term, they're mineable coins. So keep that in mind. I hope you've enjoyed this episode. Please like, share, subscribe. Need your help. NerdCon1.com needs your help. I need your help. Come subscribe to me over at The Crypto Mind. Put that in quotes. MINED for mind in YouTube. You'll come right to my channel. You can sign up as well. And check out all the other great content on nerdcon1.com. You guys have yourself a great Thursday, and I will see you next week.